Joining us now to sort out the details and some of the analysis here is our regular oil and natural gas analyst, Elliott Gue, who is the editor of the Energy Letter and the Energy Strategist. Elliott, good to have you with us, even though it's not Thursday morning. Thanks for coming in, especially for this. The start of a trend, what do you think?
I do. I think we've already seen quite a few acquisitions this year, but mainly on the smaller side, obviously. But with the credit markets back to more normal conditions and valuations way down from where they were in the middle of 2008, I don't think it's going to be a big surprise at all to see quite a few acquisitions going into next year.
I saw an interesting quote from Elliott Gue, who's senior energy analyst for Oppenheimer. He's been on our air a number of times. He said, Exxon is the group leader and it sets the trend. I would expect more acquisitions in the next 3 to 6 months. Is it possible to put a time frame on the real hot activity for M&A?
I don't know. I don't know how specific you can get, other than to say that that's definitely the case. Is that this is the first big major integrated oil company to really make an aggressive play for U.S. Unconventional natural gas. Mm-hmm. Obviously, we've seen companies like BP, which is partnered with Chesapeake on a number of different plays. Statoil is partnered with Chesapeake, and there's been this sort of overhanging idea that one of the integrated producers would get much more involved in unconventional U.S. natural gas. But it hadn't really happened in terms of a major acquisition like this until Exxon has now done it. Obviously everybody spent the whole day looking for who's next. What's the next producer that's a likely target for a company like Exxon, Chevron, or any other big integrated companies that might want to get a bigger foothold in the area. And you got to think that all those companies are looking at it right now. Since Exxon sort of broke the floodgate, everybody's looking for who's next. And they're going to have to do it relatively quickly because valuations are going to start to move up on these things. Already we've seen today, obviously XTO is up a lot because of the takeover. But
I think up 15% after an 18% jump yesterday.
Absolutely. And if you look at all the others in the space, they're up as well.
Mm-hmm. Elliott, I'm curious about the phenomena you talked about over the last few months, and that is some of these major natural gas heavies, the independents that is, selling off assets, getting cash on hand. What does that do to a potential purchase here? I know that ExxonMobil took on something like $10 billion in debt by buying XTO. What about some of these other big-time natural gas producers and the fact that they do have a lot of cash on hand?
Well, it's kind of a divergence. There are really two camps. Some of them have quite a lot of debt. For example, Chesapeake still has quite a large debt burden. Not that they really have any trouble, financing that because they have good cash flow as well. But that when an acquiring firm takes over another company, they obviously have to assume that debt. Mm-hmm. Others like EOG, for example, are pretty low debt and quite a lot of cash on the books.
And we talked about Devon Energy not too long ago making some major sales of its overseas property to get that cash on hand.
Right, and then they're going to refocus a lot of their attention on unconventional natural gas in the U.S. So it's definitely, I think it's definitely a sign. The deal is a sign that there's a lot of money going into U.S. unconventional natural gas. It proves something that we've been saying for a long time now, which is that it's a world-class play. And that there's just going to be a lot of investment going into these plays in the coming few years.
What about the insinuation that ExxonMobil sees natural gas as such a big player here? I think that the comment I mentioned last week from their government affairs chief is a pretty good indication that they see legislation changing the field, moving to a lower carbon economy, and that natural gas is such an integral part of that.
Well, there's no doubt that any climate legislation, anything that limits the carbon dioxide emissions you can make, is going to favor natural gas, whether it directly spells that out or whether it's just simply a cap and trade type of plan providing limits. Natural gas is the least polluting of any of the major fossil fuels, therefore it's going to benefit from that. I also think that Exxon is probably looking at it and saying, natural gas isn't likely to stay as depressed as it has been over the last 4 or 5 months forever. Right now, we sort of saw a perfect storm late last year where we had declining demand and a big surge in production. Drilling activity is way down. We're seeing some signs of declining production, and demand is likely to return cyclically just because of the recovery in the economy, and also potentially a secular trend as a result of some sort of a climate deal. Those two trends coming together means that most likely natural gas prices aren't going to stay down in the $4 or $5 region forever. Probably they're going to have to go back up to the $6 or $7 region minimum before it becomes economically possible to produce a lot of these plays.
So does this start a floodgate looking at the investment side, that is, Elliott, and we see XTO going higher, ExxonMobil going lower. That seems to be natural during an acquisition like this. But will there be more speculation on the markets of these energy companies in terms of natural gas independence getting more play in terms of buys and some sells with the oil majors?
Yeah, I think you're definitely going to see that. I think you're going to see, and it's not just the big, it's not just the major integrated oil companies that are going to be looking to buy independent gas producers. Also, bigger independent gas producers looking to buy smaller players, and you've seen that across the board today. All of the smaller independents, mid-sized independents, are up big, and people are really looking for what the next acquisition opportunities might be. You know, EOG Resources, they've been up very big. They're definitely a lot of buzz around them. Chesapeake has even had some talk over the last year and a half or so periodically that they would be a buyout candidate, partly because they have partnered with BP on a number of plays. Incidentally, XTO actually partnered with Exxon on a play in Colorado, so that may be where they got that idea and they got to know the management team there. But really, any of these smaller players in those key shale plays, XTO is pretty much in all of them. But really the hot ones that everybody's been talking about are the Marcellus Shale in Appalachia and the Haynesville Shale in Louisiana. Those are the two that look to be quite cost competitive even at lower natural gas prices. So I suspect you're going to see a lot of speculation around companies with exposure to those two plays.
Elliott, final question. Any way to give us an idea of what will happen over the next several weeks? Can you predict a merger? I don't want to ask for particulars, but do these seem to come like dominoes and fall fairly quickly, or is there simply a chaos theory at work where it comes when it comes?
Well, you know, there's been a gradual pickup since, say, the middle of this year. We saw BJ Services, which is an energy services company, but heavily involved in U.S. natural gas fracturing. They're being taken over. We've seen you know, some other deals in Canada, Suncor, Petro-Canada. We've seen a steady uptick in deal making in the second half of this year, partly because credit markets are coming back on a firmer footing. But this is the kind of deal that does tend to serve as a blueprint for other deals. So I would not be at all surprised to see over the next 3 or 4 months, the next quarter or so, a lot more deals announced. And again, I would tend to look at companies that are involved in those two core shale plays that I mentioned. Those are going to be the ones that, you know, they have the acreage, they have the position. One of the things to remember is that a lot of companies will say, you know, we have position in the Haynesville. The key is where. You know, a company like may have acreage on the edge of the play, which may not be that productive. They may not be drilling very many productive wells. Those companies with positions in the core, like Haynesville, for example, Petrohawk, another company that's been heavily touted as a potential takeover target because they have a lot of acreage right in the core of that play, along with Chesapeake, of course. In the Marcellus, a company like Range Resources has a lot of acreage in the core of that play. And also the Fayetteville Shale, the Woodford Shale, a little bit farther down the line. But companies with exposure to those areas, there's going to be a lot of speculation in the financial markets over the next 3 or 4 months that they're going to be taken over. That's what everybody's talking about today.
All right. A lot of activity to end the year, huh?
Absolutely.
Elliott Gue is the editor of the Energy Letter and the Energy Strategist. And how about if we see you on Thursday morning as usual, and we'll talk about the markets a little bit.
I look forward to it.
All right, thanks
Thank
so
you.
much, Elliott. We appreciate the insight on this interesting day.